Hello and welcome to the College Investor Audio Show. We are so honored that you chose to listen today. And before we get started with Student Loan Interest Tax Form 1098E, all about it today, woo! You can hit the subscribe button so you can get updates every single time we post some new content about the podcast. Also, as always, feel free to share this with anybody you think it would be helpful to. We'd greatly appreciate that. You can check out thecollegeinvestor.com anytime you want to dive deeper on all things personal finance and investing for millennials and really everybody. You can also follow us all over social media. Pretty much wherever you are, we're there too, hanging out. We'd love to get to know you better. Just search for The College Investor and you'll find us. All right, let's get to it. So 1098E, or the Student Loan Interest Tax Form. This is what you receive for tax season if you paid more than $600 in student loan interest last year. People receiving their 1098E student loan interest statement can qualify to deduct student loan interest. If you have significant student loan debt, this could yield up to a few $100 in savings for you. Every little bit helps for sure. Today, we go ahead and break down what this T98E form is and how it can impact your taxes so you can potentially claim the student loan interest deduction. First of all, who qualifies to take the student loan interest deduction? All right, so to take this deduction, you got to pay at least $600 in student loan interest. You can only deduct up to a maximum of $2,500 in interest. The student loan interest deduction is an adjustment of your gross income. So if you paid, say, $2,500 in student loan interest, and you earned $60,000, you're only going to pay taxes on $57,500. That's a pretty big deduction. So for the purposes of the deduction, it doesn't really matter whether your loans are federal or even private student loans. Both of them qualify for this deduction. The student loan interest deduction goes to the person who is legally required to pay the student loans. So that means if your parents took out loans for you, then they get the deduction. This is even true if you make payments for the loans to them. Married borrowers gotta opt to file taxes as married filing jointly if they want to qualify for this deduction. The student loan interest deduction is also affected by your income. It's a deduction with a phase-out period, which means as your income grows, you may have a lower deduction. We have a table that shows you your income affects your ability and how that works to take a deduction for 2023 when you file in 2024. We break it down all for you so you can just see it for yourself at thecollegeinvestor.com right inside this article. Now, the next question we ask is, how do I know if I qualify for the student loan interest deduction? If you meet or succeed that $600 interest requirement, your student loan servicer should mail you a copy of a 1098E form. Box 1 of the 1098E form contains the total interest you paid on your loans in the previous year. You can, of course, just go into your loan servicer website and see it for yourself too, usually. So people with multiple student loan servicers may not automatically receive their 1098E forms if they paid less than $600 in interest per servicer. So in those cases, call your loan servicer, log into your portal for more information, and to ask them to issue the form. While you don't need the form to complete your taxes, it's a whole lot easier than trying to figure out the amount of interest you paid on your own. Now let's take a look at the impact of the student loan pause. So the student loan payment ended in August of 2023. For a whole bunch of borrowers, the first payments were due in October of 2023. The result of this is that a lot of borrowers might not have paid $600 in interest in 2023. If you did, holy cow, what happened? Because you only made payments in October, November, and December. Furthermore, roughly 1/3 of borrowers have been placed on administrative forbearance just because of student loan servicer failures. Those borrowers would not have been required to make any payments, and their interest rate was, of course, 0%. The end result is that a whole lot of people will not have paid enough interest to claim the student loan interest deduction for 2023. However, just something to keep in mind for 2024. So how do you use the 1098E form anyway? The 1098E form is a very basic form that contains your personal information and the amount of interest you paid. That's it. If you receive multiple 1098E forms, you're going to need to just add the amounts in box 1 of the forms to determine your total amount of interest paid. And remember, you can deduct up to a maximum of $2,500. If you're using a tax software to do your taxes, the software will automatically calculate your deductions. However, if you're hand filing your taxes, you'll need to enter your total interest paid on your Form 1040. Since the student loan interest deduction is an above-the-line deduction, you don't really need to worry about an entire itemization schedule either. If you want to find out about the best tax software and a whole lot more about student loan interest and all that stuff, you can check out thecollegeinvestor.com. We have tons and tons of resources for you. You can also ask us questions, leave comments, concerns, all that stuff when you follow us on social media and connect with us there as well. Just search for The College Investor and you'll find us. Thanks so much for stopping by today, and we'll talk to you again real soon.